At Kayne, we really try to always be fully invested. We're not paid to hold cash. We don't try to time the market. I think that's probably one of the most challenging things to do, and frankly, a fool's errand, right? Because if you're pulling money out, you have to assume that you know when you're going to pull money back in. So for us, we're long-term investors. We'd rather just own our businesses for a long time and let them compound, through a market cycle. But that requires really knowing that the business is going to be durable, even if we do hit any kind of recession or air pockets.
From a long-term perspective, would you be running the rule over some of the regional banks now? Because you'd have to imagine that, even with all the stress that they're under, it's not as though all of them are going to go bust. Yes, we've had the runs, but is there any case to be made considering how cheap they are at the moment to be taking a closer look?
Yeah, I think there's something to be said for that, right? If you think about it, there's no asset that's so divine that the price doesn't matter. And the same is true for assets that are under pressure. For us, that's not the type of investing that we do, because for me, my biggest question outstanding is what is going to be the regulatory backlash to what happened at Silicon Valley Bank? And it's really hard to know, right? Because that's how regulation works in the US. We try to fix a problem that happened in the past, and then we create new problems coming forward. So before it was too big to fail, and now is it too small to save? We don't know. I think it's going to be really tricky to guess where regulation is going to be. And so for me, that's why we're kind of hands off on most of these regional banks.
Yeah, it's not like the mandate keeps changing. You just keep getting additional mandates, mandate after mandate, on how to protect different segments of the economy. I just wonder, just because the China markets have come online, how are international markets looking to you as an investor right now from a relative yield perspective?
Well, I think there's lots of interesting opportunities internationally to be had. It's fascinating to me seeing how the Chinese economy comes back online and what that means for the rest of the global economy. We can, the knee-jerk reaction is to think about things in terms of commodities, and I think that's true. But understanding how supply chains actually get fully unraveled and how that impacts the Chinese consumer is really compelling and interesting to me too. So, I think on a general basis, risk, I still think a better market is probably the US market, but I think there's lots of compelling companies abroad that have good competitive protections.